Well, there has been a trend that started a good year ago where people thought, well, maybe I'd like to have physical gold. And there was this this trend towards physical gold, and then the gold exchange traded products, and some of them were suffering. And where investors thought that, well, maybe I'd rather have the physical bar under my pillow type of thing. So those concerns seem to be about the financial system or whatever it may be, maybe about changing rules where they might restrict things. You mentioned the Bank of England. There is a fear that some of the tariffs might inhibit some of the flows. Not that that would be by design, but because as anybody has seen, these executive decisions or orders have had such broad brushes that you never quite know what else is going to be caught up in it. And so I think some people just say, hey, I like my gold bar under my pillow rather than anywhere else.
Axel, help us understand why gold may be getting a push higher because of the planned US sovereign wealth fund.
Well, to me, if you think about it, the sovereign wealth fund is typically a place to allocate surplus money for a government. And clearly that's not the case. The US has large deficits. And instead, what this, in my view, is it's a fund to conduct industrial policy. It's a phenomenon we've seen in the world. The Chinese have done it for a long time. Europe really wants to ramp that up. Mario Draghi has a push to spend 5% of EU GDP on investments. And same in the US, they want to ramp that up. And what that means is that money is going to be allocated by the government, which means it's deployed less efficiently. Combine that with obviously increased trade barriers and whatnot. All of that smells like it's very expensive, very inefficient. It's the sort of thing that gold investors like, not that they necessarily like the tariffs, but for the price of gold, it's very helpful. Because when the rest of the system is inefficient and people throw a lot of money at it, it means that gold can compete better in that sort of environment.
Yes, Axel, the World Gold Council report for the fourth quarter came out, and it noted that the central banks were buying and were very active as a diversification strategy continues to raise their gold holdings. So if you were to identify a particularly active buyer amongst the central banks globally, who would they be? And is that a trend that's just set to continue given all the uncertainty?
Well, I haven't looked at the details of the changes in the holdings, but ever since the US has weaponized the dollar, those countries that are, let's say, less friendly to the US have been, quote unquote, incentivized to diversify out of the dollar. And I'm not suggesting they put all their reserves into gold, but gold is one of the beneficiaries of that trend. Noteworthy, by the way, is that the recent Chinese New Year, during those days, the price of gold continued to move higher. And so it's not, quote unquote, just China or just another country buying it. There seems to be broad-based demand. And I think the recent announcement of tariffs and reversals, again, it doesn't just tell retail, it also shows government that maybe, just maybe, you want to be diversified. And again, gold is but one of the beneficiaries of that trend.